All right, let's start with the trivia. In case somebody's still on their way here. Number one, what actor starred opposite Anna Kendrick in the title role of the 2016 thriller, The Accountant?
I said Ben Affleck.
Yes, correct. And if you haven't seen that movie, it's really pretty good. It'd be worth watching. So Ben Affleck, number one. Two, what is the average lifespan of an American $1 bill?
30.
65.
What'd you say?
5.
5 years. Yeah, 5 years. I don't know where they go.
I knew it
In the trash. Okay, number three, what is the largest retailer from 2016 by revenue? Name starts with an L, they're blue, white, and red.
Lane brand.
No, Lowe's, that's right. Way to go. Lowe's is the right answer.
Wow, look at him.
How many times does the word 20 appear on the $20 bill?
4. 8.
5 is correct. 4 on the front and 1 on the back. What do you have? 30 or something.
Hey, there's no shame.
What D word, which literally means money in Spanish, has become a slang term for money in English?
Dinero.
Dinero. Edgar, got an answer on that? All right, hopefully, I think everybody probably got that. What is the most counterfeited banknote in the United States?
$20. 20.
Christine Gallegos, nailed on the trivia, $20 bills. $20 bill is the most counterfeit. Where are we at? 7, the average age of a billionaire as of July this year.
55. 57.
Haven't heard it yet.
40. 47. 65.
65.
You said.
So we're not there yet, right? We still have time. The financial term, IPO.
Initial public offering based to Kelsey.
Yes, everybody knows what that means.
Because who knows that? Stock market.
When it's the very first time stock,
Yeah.
it gets introduced to the market.
I have no idea.
That's the IPO. The first billionaire athlete.
Muhammad Ali. LeBron.
Good, yes, Michael Jordan is correct.
And you guys watch the movie?
Yeah.
It's a good movie.
Okay, and the last one is a pretty easy guess. Benjamin Franklin misspelled which word? Pennsylvania.
So nobody beat it now.
All right. Anybody get 10?
No.
I got 10 because I wrote a bunch in.
We got 7.
We.
Really, truly? We got 7.
Got 7? Anybody else?
We're all thieves.
Who's
Tiebreaker. What are we doing with tiebreaker? Do we rock, paper, scissors? Something.
All right. Who's in real estate their first year? Just the two of you?
Oh.
How many did you get right?
I don't know.
How many did you get right? 6? All right, I'm gonna give this to Jerry. All right, we get to Miles. Miles, very
That guy.
You're welcome. All right, so we have 2 that are brand new this year, 1 to 3 years in real estate. Raise your hands.
What is that?
1 to 3 years doing this job. Couple, that's kind of me also. And then, if you're over 5, well, first of all, just thank you for being here. You're awesome for being here. This is probably not the most exciting topic, so, whoever strong armed you into being here, I, appreciate them, and get your pincher ready to stay awake. If you do a full head nod, I will call you out. But, anyway, the money aspect of your job is pretty important. You got into this job for a variety of reasons. Maybe you just like to go into other people's houses and see what they do with them. But making money is probably somewhere on the short list. And being able to not just make money, but, account for that money and maybe take home more than, what you did last year, because you found a way to save it, to get another deduction, another expense, then, that would be a good thing too. So thanks, Tracy, for being here. My name is Kelly Pert, and Greg is my husband. He's been in the business longer than I have. I've been doing bookkeeping for Greg in his various business ventures, since about 2008. I think it's not, what did you say, 3? Oh, 2003, really? I'm not an accountant. I'll repeat it. I'm not an accountant. I am a numbers person. I like data. My job before real estate was always in IT, and it was a data related roles. And I love being able to take data, capture it, make sense of it, make it be, information that you can then use for some other purpose. So that's my role. This is geared towards the newer agent or, not fully, but I know there's some seasoned people in the room, so I am by no means an expert here, just wanted to share what I know. And I'm sure there's some of you that have learned some tricks along the way as well, so feel free to share what you know as well. So there's no trade secrets here, we're just all trying to learn this aspect better. Okay, so congratulations, you guys are self-employed, and that is really a big deal. It takes bravery to step out on your own, to be your own boss, and there's a lot of advantages that come with that role. Flexibility is at the top of your list. You can do this job full-time, part-time, daytime, nighttime, weekends, you kind of meld it to fit your schedule. The challenging news of being your own boss is you are one and everything. You are the whole company. I worked with Kelly Dearpool in the past at Federal Home Bank, Federal Home Loan Bank. And, obviously there's a sales department, there's a manager of sales, he's got a whole crew, somebody in charge of marketing, and she's got a whole crew of people. Corporations, they have teams of people that do these jobs, and they have different skill sets. As self-employed people, we're trying to do all the roles, and we're probably not going to be good at all the roles. We're all different. We're left brain, we're right brain. We come from different backgrounds, different experiences, and eventually, maybe you can leverage some of these roles out, when you start making some money and you realize, hey, this is what I'm great at. This is the stuff that I really hate doing. It's not revenue generating. So you hire somebody to fill that spot. But even if you do that, it's always good to know what that spot entails. So you know who to look for, if they're going to do a good job or are they doing a good job. And that's kind of where accounting and bookkeeping, sorry for the typo there. So that's really what we're going to go into here. We're going to start with the end in mind, which is why do you do tracking of your business from a financial nature? And one of the reasons is at the end of the year, on April 15th, you're going to have to tell the IRS how your business did and pay taxes on that. So we're going to start with that in mind. Schedule C, and we'll get into that. We're going to talk a little about business entity types, and I imagine we have 3 represented in this room, so we'll talk a little about that. Self-employment tax, which can be a bad surprise come April 15th. So I want you to be prepared for that, and then some best practices, some tools that I've used in the past, and then any links that might be helpful, just web URLs that you might want to reference later. If you have questions along the way, make sure you can raise your hand, just interrupt me, that's totally fine. I won't lose my train of thought.
I made a reason and it remember to encourage people to eat more sandwiches. I cannot eat all of those. Feel stuff, tell me.
Okay, so one of your handouts, and did everybody get one? I think Amanda, you want to schedule C? One of your handouts is a schedule C. This is the tax form. Boring, yes. Important, yes. So I've highlighted this into some different sections, but this is for a sole proprietorship. It's basically how you tell the IRS what your business did financially for the year. What was your income, what was your expenses, what was your profit? And then eventually you're gonna figure out how much in taxes you owe based on that information. So there's just and I'll tell you, this one is for a sole proprietorship, and I know that's not what everyone in this room is. The things that are asked for on this form, they're similar if you're an LLC, they're similar if you're an S corp. So even though what we're, representing here is the sole proprietorship form, it's gonna cross over into those other entity types. A couple of things I want to call out at the top of the form. What's circled in blue there, so you have to indicate to the IRS what your accounting method is. And you might say, I have no idea what you're even talking about. So your options there are cash, accrual, or other, and I have no idea what other would be, but I'm gonna recommend that you pick cash for the business that we're in. An accrual method of accounting is a method where you recognize income and expenses when they're incurred. So you have deferred income and you have accrued expenses, and it's what corporations use because they're showing their books to the public, and the public is making decisions to invest. And the timing of their books needs to be in such a way that accrual accounting is the right choice. Cash accounting just means it's gonna follow your bank account. So if you deposit a commission check on Wednesday, that's when your income is gonna get recorded. If you have an expense, you pay your MLS dues on September 3rd, your expense is gonna fall on September 3rd. Where it gets a little squirrely is you might be tracking your volume from your real estate business on a monthly basis. If you have a closing at the end of the month, maybe September, you had 5 closings. If you had some late in the month, maybe you didn't get your commission checks until October and get them in the bank. And so you have a little bit of a mismatch with this cash method of accounting. But as long as you kind of understand, there's a little bit of misalignment possibly that goes on. Once you determine that you're gonna be a cash method of accounting, you really want to just keep that method for the life of your business. And if you want to change, you have to file a form specifically for that purpose. And I would assume an accountant would be involved in doing that. But off the top of my head, I can't think of a reason why you'd go anything but a cash method of accounting. Something else I highlighted is number, let's see, letter I. Did you make any payments that would require you to file a 1099? So a 1099 is a form that, if you're a contractor and you make income, that's what your income is reported on. So we are contractors. We're going to get 1099s for the work that we do for the from the brokerage. They're going to tell us what we earned in the year. If you, as a real estate agent, hire an independent contractor, we use Ken Dahl for an example for our photos. Over the course of the year, we will pay him more than $600 for taking listing pictures. At the end of the year, we have to give Ken Dahl a 1099 saying what we paid him. And then he should in turn report that as income for his business. So if you pay anyone, a transaction coordinator would be common, certainly a photographer, maybe a staging company. Over the course of the year, if you pay them $600 or more, the IRS expects you to give that person a 1099. And there's a deadline, I think it's January 31st, that you're supposed to give that to the person, file it with the federal government, and file it with the state of Kansas. So it can be awkward if someone's running their business as a sole proprietorship, because their identifier is a social security number. And, that's not a thing that you want to generally give out. But if someone's, really doing this business as a business, it would be smart of you to ask for their W-9 before they start working for you. You all filled out W-9s for your brokerage that just indicated what's your tax identifier. So that 1099 can get issued. Yes,
You said when you issue a 1099, you need to do it quickly within a certain amount of time from when the services were done.
after the fiscal year, so
Oh,
before
okay.
January first, you'd report all of your,
Okay.
yeah,
I
your
was
issuing.
thinking, the end of the year,
Oh,
I
no,
go find all of them, but I should get that 1099 or the W-9 upfront
yes,
before the end of the fiscal year.
yeah, but we used a girl, it was many years
Before
ago.
they do the work.
And she did photography and I was, asking for her social security and that was the last thing she wanted to give me, but it's like, this is what I have to do. We've probably missed some over the course of our business tenure, I've not been arrested for it, but it's what, you are supposed to do that. In the links and we'll figure out a way to email, but I have used an online service to issue 1099s. It's like $4 or $5 a 1099. They take care of emailing it to the individual, filing it with the federal government and the state government. So,
What's that called?
it's in the back here. We'll get to it. So the other question up there is, did you materially participate in your business? And the answer is yes, you are the one making the phone calls, showing the clients houses. So that is definitely a yes. This Schedule C is not just for real estate agents, it's for anybody who's in business for themselves. So it's, not everything applies for a real estate agent. So part one of Schedule C is the income aspect of your real estate business, your self-employed company. The one thing I'll point out is that you want to report your income at a gross sales amount. The example I have here is you sold a home for $100,000 and, whatever side you were, you got a 3% commission on that. So a $3,000 check is handed to your brokerage. And then your brokerage is probably going to take some sort of a fee out of that check and hand you something less than $3,000. When you record that as income, you record it as the full $3,000. That was the gross amount that you made. Anything that was taken out of that is an expense, and you want to put that in a different category. It's going to net to be the right amount, but you do want to make that make that distinguishment. The other things in the income, they don't really apply. Sometimes I'll argue with my accountant that referrals can go in cost of goods sold, but if I had a jewelry business and I had to buy wire and beads and that sort of thing, cost of goods sold would be the cost of those items. In real estate, there's not really a comparable. Again, you might argue, as you think about it. Give me a break. You're probably not thinking about this, but chances are what you pay on line one is also going to be the same thing that comes down to line 7, because you're not going to have anything in the middle to subtract from. Questions on that? We'll keep going. Okay, let's talk about part 2, which is expenses. I like word cloud, so I've got some ideas for what might be an expense as a real estate agent. Obviously, the fees that you pay for NAR, CAR, SAR, the MLS dues. You paid some fees, Jerry and David, you paid fees to get into this business. Okay, you had to pay to take the test at Pearson, maybe the test, the 30-hour study. All those things certainly count, business signs, a name tag, business cards, yard signs, postcards, and anything that, you're using to be a real estate agent is going to count as a business expense. A couple of rules I have down at the bottom are where you put it is maybe less important as long as you put it somewhere. If you're trying to decide, well, is that yard sign, is that advertising, is that some other type of expense? The IRS is going to care less about what, what category, maybe they, had a different idea of what category, but the more important thing is that you got to report it somewhere. Secondly, that every time you buy that type of thing, you record it in the same spot. So over time, it's apples to apples when you're looking at how much did I spend in advertising last year to this year? You know, make sure whatever you're buying and putting in that category, you label it as such, time after time. And then if you have questions, every IRS form, the form's always available on irs.gov. And a set of directions for the form is always available on irs.gov. So there's lots of explanation behind this schedule in particular. So I circled in blue where I feel like common expenses are incurred for real estate agents. And we're going to go into a couple of these in more detail, but you're obviously going to have advertising of some sort. Car and truck expenses, we'll get into that one in the next slide. You're paying commissions and fees to your brokerage. You might be paying contract labor. So that's where that 1099 is. If you're paying $10 for pictures or someone for a transaction coordinator, that's where the expense of that goes, and it should match what you issue on your 1099 for what you paid them. Number 17, legal and professional services. Maybe you're using an accountant to do your taxes, a lawyer to set up an LLC. Yes?
I'm curious, when you use this form, are you replicating these expenses in your categories in say QuickBooks?
Yes.
So when you create your categories, you're kind of going by these. And then that's how you're reporting them, tracking them, so you can reference and know where you're putting everything.
Yeah. And I honestly have more than this in QuickBooks, and I like to break my sales into the listing side or the buying side. Let's break out my transaction fees. So that's income, and it's a different kind of income.
So do you do like this, the main account, and then do sub accounts under that for someone? Okay.
Yeah. What else? Office expenses, you know, somewhere along the line, you're gonna need pens and Post-its, and Dave was talking about needing some notepads. So obviously office expenses, maybe you rent an office from your brokerage, so. Anyway, those are a few ideas of what type of expenses you would have in this business. So let's talk about the mileage expense. What's up in black in the top left corner is right from the IRS. As a self-employed taxpayer, you can deduct expenses from mileage accrued while doing business. This has the potential to be one of your largest deductions from your income. I have an example here, and we'll talk through this. You can pick one way or another. You can't pick both. So you either take an actual expense for your vehicle. So you can pay attention to, you know, all of your gas receipts, any repairs you have made on your vehicle, what insurance costs to insure that vehicle. Or you take a standard mileage rate. And in all the years that Greg and I have done this, I think this year is the first year we're doing one car as actual expense. And it's because he bought a new truck this year. And we were able to take something else on that Schedule C, which was a 179 deduction, which I didn't cover because it's just a little more advanced, but we're taking actual expense for his vehicle, but more often than not, the standard mileage rate is going to be what calculates to be the bigger of the two. So in my example, 20,000 miles driven for your business. The government has the rate of 65.5 cents, and that changes every year. Last year, there were actually two rates. It changed in July, so you had half the year calculated in one number and half calculated in another, but right now it's 65.5 cents. So for every mile you drive for business, you can deduct 65.5 cents as an expense on your taxes. And that's in that car and truck line that we saw on the previous form. So in this example, this rate or this method worked out for $13,100. Using, really, I just backed into a number with gas. So 20,000 miles, 15 miles a gallon, is 1,333 gallons. You take that times your average fuel, $3.55 a gallon 4,400 and some change. You know, you'd have insurance, but you're not anywhere near that 13,100. So, this is, you know, if you think about all the car, NARF, I mean, you're not paying that much money really anywhere else, maybe to your brokerage, but this is a big one, so you don't want to overlook it. If you are ever audited, what the IRS is gonna ask you for is proof to back up that $20,000 mileage number. And that's what Jerry won. An example, that's obviously a manual way to record your miles. Is anybody using something electronically that's working well for you? Go ahead, Cheryl. What do you use?
I use Mileage IQ.
Mileage IQ?
It's an app,
Okay,
and it just, everywhere I go, it automatically, I think it's $3.99 a month, might be $4.99, but it automatically tracks every single where I go, and once a month I go in there and just label exactly where it was, and of course, put it onto my profit and loss.
okay.
I
Yes,
used to
it's
say,
approved by the IRS.
huh?
It is approved by the IRS too.
Didn't know that.
I use the same thing, but for me, not always does it stay on my phone. So then I have to go back in manually.
Yeah. So you're supposed to have your beginning, mileage, you know, your odometer reader from when you started, from when you ended, who you were with, and what you were doing. So, you know, I showed a house to Greg Pert. This was the house I showed. So I can get pretty detailed. Again, it's if you were audited, but, something worth paying attention to. Uh-huh.
Just since we have a couple new people, when I first started, I was so afraid to put like too much mileage. Because I was like, oh, this is so gonna be a red flag.
Oh,
You know,
right.
the IRS. Oh, yeah, I was like 5,000 miles, like that would be safe, you know? And then when I actually like really started calculating, especially that app, because that really helps. Like last year, I was just under 40,000 miles.
Wow.
Just for, yeah, just for the business side.
Yeah.
That's fair. And so then I was like, oh God, I'm so stupid. Like I was only thinking 5,000, you know, but really if you track how much you really drive for business, it adds up. So I really love that app because literally it's a lifesaver. Can you imagine tracking that manually, like?
Yeah,
I use
well,
it-
you're on track.
I use that quick stuff in Lloyd's,
Okay,
and so then that stuff just feeds, you know, once you say personal or business mileage, then it just feeds right into the QuickBooks. for you.
that's cool. I didn't even know about that. QuickBooks, self-employed. Okay.
For the accounting and, you know, and taking care of that as well.
So for you new folks, and I think it's on the backside of Schedule C, at some point it asks what your starting mileage was when you brought your car into the business. So guesstimate it, you know, you're only a couple months in likewise. So if you don't know exactly, just put your best guess on it, so you know where to start. There's something else I wanted to say about miles. Oh, so making this an expense, it's not just doing the calculation on paper and saying, oh, I'm gonna get that entered. Pay yourself. So this is a way that you can take money out of your business and not pay any taxes on it. This is a personal expense. You're using your personal account to pay for your gas. If you're doing the standard mileage rate, okay, you're paying for your gas with your non-business card. You're paying your insurance with your non-business card. And then at the end of the month, you're saying, I drove this many miles for work this month, and you cut yourself a check from the business to your personal for that amount. Okay, and that is an expense on your books, on your business side, totally legit, and you're not paying any kind of income taxes on it, and you're reducing your net. So make sure you're doing that.
Should have been doing that all along.
But only on the standard. Not on the action.
Right. Yeah, the actual, you can just use your business account to do all those things. But it's one or the other, it's not both, so don't try to double dip on this. Okay, the next one that's not as big, but certainly something that could apply to you is a home office expense. This is on the schedule, but it's at the bottom of the part two. It's underneath where the categories of different expenses are. There is like the mileage, there are two different ways you can calculate your home office expense. Either a simplified method where you just take the square footage that's kind of dedicated to your home office. If you have a closet that you're using to put all your real estate signs in, you know, that could count as home office expense as well. But you take that square footage, multiply by $5, that's the going rate right now, and take that expense. And again, you can write yourself a check. It's not a monthly thing, it's a once a year. So it's not gonna be a huge amount. You can do an actual method where you calculate, what are my, bills for electrical, for gas, for water, for my mortgage and interest. What percentage of my house is being dedicated for home office, and you know, calculate out that way to do the actual. So there are two methods to doing that as well. If you're renting space at the office and you take this, you might be pushing it, but if you're not renting space, you're running your business somewhere. So, you know, consider this one. So just so we're clear on what net profit is, we talked about income being reported at that gross amount, so that $3,000 in our example. You deduct all of your expenses in advertising and mileage and home office, and you get down to what's called a net profit, net revenue, net income, net something. It's called lots of things. Your first year, maybe it's a loss. I mean, it could end up that way, and that's not a unheard of thing. So what you do when you finish Schedule C is that number, that net profit number, goes in two different places. And I've just taken this from the form. You either enter, or you enter it on Schedule 1, which is your normal N40, which everybody is filing, or you've been on your parents maybe. And then also on line 3 on Schedule SE. What does SE stand for?
Self-employment.
Self-employment tax, and it's horrible. So your tax is gonna be driven off that net profit. You might be eager to say, well, I'm gonna inflate my expenses to get that number down, something really low, but remember, when you go to apply for a home loan, that's what your lender's gonna look at, you know, what's your profit running this, self-employed business, and, you gotta qualify too. So, you know, just be fair about it, be honest, and, it will be in your best interest. So let's talk about the business entity tax, and then we're gonna come back to self-employment taxes. So who here is a sole proprietorship? Raise of hands, a few. Okay, LLCs, we have some LLCs in the room. Okay, and anybody with an S corp election? Okay. So a little bit of everything. Our history, you can be all three. We've been all three. So Greg started real estate in 2016 as a sole proprietorship. Somewhere along the line, you got some education about, hey, I can protect myself a little better if I move into an LLC. So we were there for a while, and then as business continued to grow, the accountant was like, you could save some money here if you made that S corporation election. So it's okay to start someplace and move forward. So we'll just talk about what each type, what it means for a sole proprietorship. You just start, you just declare, I'm a business owner, I'm self-employed, and you don't have to file any paperwork with the state. At the end of the year, you've got to, report your income on this schedule that we've been talking about. But otherwise, you just get going. You can do it doing business as, I think you have, Ava, maybe, but it's a single owner. So you can't do it, husband and wife. You'd have to move into an LLC, but one person. The earnings, so your net earnings, the net profit that we just talked about, that bottom line on your Schedule C, it's subject to self-employment tax. And we're going to talk a little about what that means. And the reason why people move to the next one is that you're personally liable. If you were to get sued, your personal assets are at risk because you're just in business by yourself, okay, under your social security number. So everything you have would be at risk. to move that liability and to separate your personal assets and your business assets is moving to an LLC. That's one way to do that, which is a limited liability company. This one, you can't just start. It has to be something that's recognized by the state of Kansas. And so you file some forms with the Secretary of State's office to put that LLC together. When we've done it in the past, we've used a lawyer to draft the articles of organization that just states how this LLC is gonna operate. You might, have sold property to an LLC, and you always have to get that document because it also indicates who has the signing authority. For an LLC can't sign a contract, it has to be a person. And those articles that are filed with the state identify who that person is. So there is some money, some investment. You could likely use LegalZoom. It's nothing I've ever done, but there are other ways to create an LLC to create the documents that you would file with the Secretary of State. Once you've established that, you do have to keep it in good standing, you have to file with the Secretary once a year, an annual report. And it's all done online, and they ask you about 4 or 5 questions. It's really a simple process. At the end of it, you pay $50 and you stay in good standing for the rest of the year. So all I really want is your money. There's not a lot that goes into the annual filing. It can be a partnership, an LLC can be a partnership, a husband and wife. It can be lots of, different owners underneath that umbrella. Like the sole proprietorship, that net income amount that you got down to the bottom on, your Schedule C is subject to self-employment tax. And then, again, you've made the separation of, you've got your business over here. If your business was ever sued, only your business assets would be, at risk and nothing that you're doing personally. So one thing about an LLC, you've got to give it a name, right? We're Pert Home Team. A few years back, we were Pert Realty Team, and KREC said, you can't have realty in your LLC name, and you got to change your name because they felt it was confusing that we might be looked at like a brokerage with that name. So a couple of things when you go to name your LLC, you need to make sure your name complies with KREC. You also need to make sure that no one else in the state of Kansas is using that name. And so there is a database, and it's in the links in the back also, where you can go and search for existing LLCs to see what's already been taken. Or, if you're ever, obviously we sell real estate for LLCs. We help keep LLCs buy real estate. If you ever need to do some digging, this database, can help you find the owner, maybe a mailing address. So it's an important database to know whether you're doing this business entity type or not. Anybody have anything to add? No? Okay, so an S corporation is really just kind of that next level. A month ago, NAR offered a webinar on S corporations, and I was one of those people that watched that webinar. And the question is, well, when is the right time to move from one to the other? And really, if you have a good accountant, the accountant's going to be your best friend and telling you when the right time is. But in the webinar, the guideline that NAR put out was when your net income is $80,000. And 80,000 was the figure that they threw out. So, take it with a grain of salt, and you could probably find the webinar yourself if it's something you're really interested in. But so as an S corporation, there's some similarities to your LLC. You've got to file paperwork with the Secretary of State. You've got to give it a name. You're going to get a business identifier. When you do that, you got to file that annual report again and pay them $50, $60. You do have to have a board of directors. Even if you're a single member S corporation, you are the president. And once a year, you have a meeting with yourself. And you write down the minutes of that meeting that you had with yourself, and you file that with the Secretary of State.
It's like a lot of effort for 80,000.
So there is that extra thing that you do with the meeting and the minutes. Again, you've separated your business assets from your personal assets. So any kind of suit, you're protecting yourself. The biggest thing about the S corporation, or where it starts to really veer off from the other two entity types, is you pay yourself as an employee. Okay, you're not Greg Pert, the independent contractor, you're Greg Pert, the employee of Pert Home Team. And you get a paycheck like the one you used to get when you worked at Starbucks, okay? It's a full-blown, here's your employee, you've got taxes taken out of it, Social Security, Medicare, and so forth. As soon as you introduce payroll into your business, it's a big step, because the federal government wants to know more information about your payroll, and they want to know every month. You file your payroll taxes with the federal government, you file with the state, who else? Unemployment wants to know about your employees. So this isn't a step that you take casually, because there is a lot more that comes with it to actually have employees versus contract employees. But the big thing, what makes it worth it, is what you pay to through the payroll is subject to self-employment, but what you can also take out money from your business through dividends that are considered unearned income, and it's not subject to self-employment tax. So that's what you're trying to do with an S corporation election, is limiting how much you pay in self-employment. You can make, and I didn't know this, but I learned that in the NAR webinar, you can make a late S election. So if you've been an LLC and you want to go back and kind of retro be considered an S corporation, you can do that. Like anything, there's a form that you would file. And if you are an S corporation and you're paying through normal, payroll, other things kind of open up. You can deduct your health insurance premiums and your out-of-pocket medical expenses. You can't just start doing that, but there's companies that will help you do that the right way, and they file all the paperwork. So we have a health reimbursement account where we can, take that deduction. You can set up 401ks for companies that, pay their employees, and that's another deduction that you wouldn't have available to you. But again, you can't just start doing that. You have to use, other companies that specialize in that file all the reporting that you would need to make that totally legit. But a good accountant is going to help you, take those steps and figure those things out. So I've mentioned self-employment taxes, and they are the enemy, and I'll tell you what's going on there. So this is an example of a typical pay stub from ABC Trucking. So you're gonna make, a certain wage or maybe a salary. There's gonna be the gross, but then you're paying your federal taxes out of that, your state taxes. You're sending some money to Social Security and Medicare, right? That's, we've all had jobs where we've got this paycheck. What you may not have realized is the Social Security and Medicare, well, they're based on a percentage, and whatever you put into that, your employer was matching that. So if out of your check, $5, was sent to Social Security, which hopefully you're gonna get that later in life, your employer was also adding another $5 and sending that to Social Security. So, there is a cost of having employees, and that's one of the things. Same with the Medicare. So when you're self-employed, you are both sides of that. You're the employer and the employee, and you pay both sides of that. And that's what self-employment tax is. It calculates out to 15.3% of that net income. And that is, if you were paying half of that, you're paying 7 point whatever it is, and your employer was paying the other half. But as a self-employed, you're paying both sides of that, and that's can be a hard pill to swallow. You're also on that net income paying your federal income tax and your state income tax. So the best advice I could give you, especially if you're just starting out, once you start to make money, to make that income, set some aside 20 to 25% to be able to pay your taxes next April. The other thing you can do as an established business, you maybe have a sense of what your income is gonna be, this year, especially by now. Or just over time, as your business grows, you tend to have trends that you can rely on. You understand what your tax liability is year after year. So making a quarterly payment, an estimated payment to the federal government and the state government will also keep you out of hot water to avoid some fees, and some penalties. Everybody wants their money now, they don't want to wait till April to get your money for 2023. They're trying to do business, and they would like it sooner than that. So that's why you get penalized, but making those tax payments could help you out. And just like anything, as an employee, you make your best guess. If you overshot it, you get money back. If you undershot it, you're gonna pay some more, but it's not a bad thing to do. I didn't label this slide very well, but it's just a quick example. I copied it from the NAR webinar because it was just so clear, I guess. So this is assuming $120,000 in net income. So after your expenses have reduced your gross, if you're just take the 15.3%, calculates out to 18,000 and some change. If you pay yourself as a S corporation, as an employee, and your reasonable salary is 48,000, you pay taxes on that, so $7,344. And then maybe this isn't enough to live on, so you take dividends out of your company that aren't subject to the self-employment tax. The reasonable salary, you could Google this to try to figure out, what should I pay myself? Our accountant usually has a opinion on that, and I just reduced Greg's wages like a week ago. He doesn't even know it yet.
Yeah.
I'm paying him less because, he's really not living up to it.
We write you up.
All right, any questions on that?
You said dividends, so like if you just draw from your business account, you're not being taxed on that.
Right,
Got it.
right.
There's some kind of federal law, like tell your employee that you drop their wages.
I just did.
You've been put on notice.
Okay. So that's all been a lot of what you need to do for your financial side of your business, your bookkeeping side of your business. The how, first of all, if you haven't created a separate bank account for your business, do it this afternoon. It doesn't need to be a business checking account. It could be a standard checking account with, Core First, Cap Fed, sorry. Any other bankers in there? But you don't want to go through your bank statement going, oh yeah, that trip to Target, I think I bought thank yous for my business. And that one, no, that was shampoo. Just don't try to put it all together and make sense of it. Separate those business expenses into their own totally separate bank account. And the other thing, as you're starting, you have a phone, you have a computer, your business all of a sudden just started using that. You can pay for that phone, pay yourself for that phone. It's worth something. That was an asset you brought into the business. It has a value. If you had to go out and pay for that computer because you didn't have one, what would you have spent? It's okay to pay yourself for that. And then all of a sudden now it's in your business account. So you're going to record it as an expense. My reason for saying use Venmo and Cash App and those things sparingly, I do a lot of bookkeeping where other people are spending the money. And when they spend it on Venmo, I have no idea where it went.
Yeah.
And so I'm like, Greg, can I see your phone? Because I need to know who you were paying on Venmo, Cash App, whatever. If it's all a debit card or at least it's gonna say Best Buy or whatever in the bank feed. And if it's a check, I can open up and see it online, and I'm not going to yet one other place to figure out what this expense was. So that's the only reason I say it, because you don't want to spend any more time than you have to doing this. So you can save yourself some time if you try to keep it you know, in one payment method. Staying up to date is another way to, you know, just help yourself out. Probably if you do this once a week, once a month, you could probably remember what you bought at Best Buy or Target without having to pull up that receipt and go, oh yeah, that's what that was. But if you're trying to cram all this in at the end of the year, you're finding that shoebox full of receipts and going, oh my gosh, what did I spend this money on? And it's just not a comfortable place to be. If you're using a single bank account for this, you've got your bank statements, obviously, to help you reconcile and make sure you've got everything accounted for. Your statement's gonna show what your income is, you know, your total deposits, your total expenses for that month. Remember that deposit amount's gonna be a net and you're gonna record it at gross. So there is gonna be, you know, a little bit of a reconciliation to go on, but just another argument for keeping everything separate. The receipts and statements that you keep, one word of caution, the IRS can ask you for this. Any receipt that's on that shiny paper, it's gonna fade over time. You're not gonna be able to read it in 3 years' time. So take that to your copier, you know, scan it in off your home printer or at work and make a hard copy of that so you can read it in the future. I have started keeping my receipts in QuickBooks. I don't know if you do that too. And the only thing I've thought about is if the IRS ever asks me for that, I don't know how I'm gonna serve it up. But, so right now I'm still keeping them manually as well. And then, like Toby and I, you know, his question earlier, get more detail to meet your needs. What I meant by that was, if you want to see your income broken into the listing side, the transaction fees, the buying side, you can certainly break things down to help you make sense of your business any way you want it. You just got to be able to roll it back up to something that looks like that Schedule C for your accountant or for yourself. So a couple of tools I use, and I'll get some feedback here. We do have time. Okay, so when we first started back in 2016, we used Excel and maybe even 2017 also. Our accountant gave me a spreadsheet and I have an example here, but if I keyed things in manually and put them in the right buckets and put the date and who I was with or who Greg was with, and it was tedious, but it worked. Low learning curve with Excel. Obviously there's a low expense. It might be free or, you know, maybe pay for that Microsoft Office suite, but, could be error prone and, you know, you're not going to be able to say what's been my profit over time very easily if Excel is your tool of choice. So, you know, eventually as you move a little further into your business, you know, looking at something like a QuickBooks or something similar to that, this is the one I've used and it's worked for the variety of companies that we've opened over the course of the year, you know, with retail, automotive company. I use it for my rentals, use it for real estate, use it for a brokerage. It's very adaptable. The thing about QuickBooks, you connect it up to your bank account and every day you say, you know, show me the latest transactions and they come through for you automatically. You're not keying, you know, anything in. You can set up rules. So every time you get that Zillow transaction, you know, that was for lead gen and it categorizes it accordingly. And you don't even have to think about some of the transactions that might recur. Obviously with something like QuickBooks, there's all sorts of reporting, you know, your very general profit and loss statements are certainly there. Your balance sheet, you can run a profit and loss for year to date this year compared to year to date last year and look at it side by side. So a lot more reporting options when you use some sort of software like QuickBooks. Adding functionality, what I mean by that is if you move into that S corporation and all of a sudden you are running payroll, QuickBooks has an add-on to pay me more money and I'll give you the payroll program. And they'll file the reports to the federal government, to your state government, everything that you know, would try to do manually. and likely fail at and be late at, you know, they can handle it for you.
Is that what you were saying? I think somebody asked what you used for the 1099s. It was $4 or $5 or something each.
Oh, so you can do 1099s in QuickBooks, but the $4 or $5 one is something totally outside of it. Yeah, we'll get to it. There's gonna be a steeper learning curve. Obviously, you can get into QuickBooks. They always do a 3-month initial entry fee, and if it's around a holiday, they discount it a little lower. So if you want to just play around with it for a pretty low cost, wait, I don't know if they'll have something Halloween, but just kind of keep an eye out for it, and you'll see a deeper discount for QuickBooks Simple Start, and, you know, you can play with it for a few months. You can also, when it comes tax time, if you have an accountant, you just share those books with your accountant, and he or she have what they need to, you know, to get started on doing your taxes for you. What do other people use besides these couple of?
Literally everything's quick.
Yeah. I don't know if YPN would do the job. I've kind of thought about that. They used to be part of Intuit. Intuit's the company that owns QuickBooks, and now there's somebody else, but you know, way back when I used them for my personal books and.
I started with Quicken and they didn't, share with my accountant or my bookkeeper.
Oh, okay.
So I had to switch to QuickBooks. They couldn't access Quicken.
Simple Start, everybody do okay with Simple Start?
Is that the same as Quicken? Simple Start?
No, it's just the entry level version of QuickBooks.
Oh.
It's online, you get something on your phone, you can take pictures of receipts, I mean, it's pretty powerful. Okay, so this was an example of the Excel spreadsheet that we used way back when. I don't know why I included it, but it had different tabs. So this was something our accountant gave us to fill in all of our numbers. So the front page was a set of formulas that just had references to the data on the tabs. There was a revenue tab. So we listed the income, there was an expense tab broken out by the different categories. So here's office supplies. And the total automatically showed up on the first sheet, and then there was a mileage tab. But you can do something like this. If you're doing it manually, you know, it'd be easy to just download your transactions from your bank and then add a column for that high level category that matches Schedule C. If you want to break it down further, add another column that has the subcategory, do a pivot report and be able to look at the data that way. The only thing that's kind of weird about that is it's gonna order things by alphabetically. So you're not gonna have, here's my income, here's all my expenses, and here's my net. It's, you know, gonna be a little more work to pull that out of there, but not a bad option to start with, not bad at all. Here's just some basic reports. Let me say something. That you can get easily out of QuickBooks. Your profit and loss is gonna be, what's your income been, what's your expenses been, you know, added up over time. It's gonna show it with your income at the top, your expenses in the middle, and then calculate your net profit. Chart of accounts is just an accounting term. That's the buckets that you set up, the categories of data that you put your expenses in. So advertising, office supplies, postage, whatever they are, would be what's considered your chart of accounts. There's that comparison that we talked about. The balance sheet is a point in time of where your assets and liabilities are. So your asset is obviously your bank account. So that's maybe, you know, primarily what you're looking at for your balance sheet. Or if you owe anybody money, that balance is going to be on there. And then the other one I really do, and I do this in Excel. I think QuickBooks has an option for cash flow. I just haven't ever explored it. So I use Excel to just run out a projection for a month or a couple of months, what my standard expenses, you know, my repeated expenses are going to be X, they're going to fall on these days. I'm going to get income on these other days and make sure that, you know, I'm never in the red, on the timing of, those two things, so. I've talked about using an accountant. This was something that Greg and I butted heads about for a long time. And, maybe our business was pretty simple when we first started and we could get by with doing our own thing, but certainly it's not simple at this point. And we'd be lost, if we didn't, have someone really take another look at, just the bookkeeping that we do and then pass off. So, we paid a hefty fee to have them do that, but, again, we've been able to bring in those health insurance premiums as an example, make sure we're doing our home office, deduction, appropriately. An accountant is gonna be able to look at, well, if you do it this way on your mileage, you can do it this way, or you can do it this way. They can kind of run some scenarios and tell you which way you're gonna fall better. Expensive, we didn't talk about assets here, but, our bottom line for, is $2,500. So if we purchase an item for our business that's $2,500 or more, we don't expense it. We call it an asset, and it gets depreciated, which is a different kind of category of things, but, if anybody else is, in that boat, that's the amount that our accountant has given us, is that $2,500. Obviously, your accountant's gonna help if you get audited. They're gonna step in and play a role and help you through that situation. And in the end, you hope that they're saving you money. Okay, so here are the links. So you can probably find these honestly by yourself. So I recommend now, because you've never been there, every form that you ever need from the IRS. And the instructions for the form are gonna be out on irs.gov. The 1099 was formstacks.com is what I use. Formstacks. Filings.formstacks.com. You establish a login, it remembers who you paid last year. So, if you pay the same people year after year, they're gonna keep that information, and it's easy to generate the next year's stuff. Kansas Department of Revenue, they're the ones you pay taxes to. Kansas Secretary of State is the establishment of your LLC or your S corporation. So navigating to both of those sites. So if you want to find the names that are used, for LLCs, the Secretary of State is where you're gonna go for that. But if you're paying taxes for your business, Department of Revenues. For that. And I think that's all I have.
That's a lot.
And it's 1 o'clock.
I'd like you to know that your husband is the luckiest man on earth. Because you have a complex books and you know it pretty well.
Thank you. I will track down a penny. It doesn't, yeah, I'll figure it out. I'm gonna reconcile it. I'm gonna get it to zero.
Lucky
So-
man. The rest of us over here doing it. Shooting it. Thank you.
All right. What's your biggest takeaway?
For me, I'm gonna check into that late S election for my LLC. Wonder how far back.
It said 3 years.
Well,
I don't know.
I didn't for my S corp until 2021. So 2020 and 2021, because I formed it in 2021.